Steve Smith.
Brett Starr, how are you, sir?
Doing great. Very interesting weekend.
Oh, how so?
Well, there's an overlap in basketball season and soccer season this time of year for the kids. And so we had literally between Jack and Bonnie, we had 5 different games or matches and birthday parties and stuff like that. So we're basically just a shuttle service. It really made me hopeful for autonomous vehicles in the next year or so.
Well, you're earning your Father's Day card for the rest of your life.
Yeah. I try not to complain in front of them.
They know.
How was your weekend?
Yeah, it was good. I went to, was traveling on business last week. Had a really rudely early wake up and early flight on Friday morning. Then I got home and I'd previously obligated myself to going to a high school musical.
Oh,
with Jenny. So I got to see Mamma Mia, the high school version. And somehow I managed to stay awake through all that.
Wow.
But
how was it?
Never want to see. It actually wasn't bad. They had a couple of kids who've got some talent, but it was just way more ABBA than I really needed on a Friday night. So,
yeah, I kind of enjoy going to that stuff. I mean, the music recitals, the plays. Bonnie's in a play. She's in the Jungle Book coming up, and it's going to be awful. It's just going to be awful. But for some reason, sitting in a theater watching a play with a bunch of 5th graders and 6th graders, doing something not quite great, but having a great time doing it just kind of restores my faith in humanity. It's like, oh, look.
Oh yeah. It's great when it's your kid.
Yeah.
In it usually. But if you don't have any kind of skin in the game, it's like, okay.
Yeah. Did you hear, speaking of theater, I know you're an opera buff. I'm an opera buff. Did you hear Pat Sajak got in a lot of trouble with his opera joke to Vanna White?
No, did not hear about that.
I think he might be slipping a little bit more than usual. And one of the clues or the answers to a puzzle was something to do with opera. And he said, Vanna, are you an opera buff? And she said, no, I enjoy opera, but I'm not a buff. And he said, well, have you ever watched opera in the buff? I'm just curious. It's like, oh, come on, dude. Really?
You can't do that in the 2020s workplace.
It's also a silly question, but he was slayed on social media, which he should have been.
Of course. But how old is Pat Sajak now? He's 800 years old.
I'm not even sure it's still Pat Sajak.
It's animatronic Pat Sajak. It's like the Country Bears at Disney World.
Exactly. What's that? What's the Disney World stage that rotates and you go in and look at the March of Time?
Drawing a blank on that. March of Time is just I call weekdays, days that end in Y.
Well, it's I don't know. It's one of the most famous but least popular rides at Disney World. And I'm pretty sure people just go in there to get some AC for a while, but it's pretty interesting actually. Well, let's talk about something that people actually care about.
All right.
Why don't we talk, a topic that has been coming up over and over and over again in conversations that we've been having recently is this collision of economic uncertainty, what the hell's going on, out in the market, with a complete reordering of priorities in work tech from a buyer perspective of, a stronger focus on employee experience and what that means. We think we're in the middle of a new organizing principle that's going to result in new ways of doing things and new leaders and new categories and all that stuff. And, all of that combined with, hey, we're in an uncertain economic time. We're in a period of great change for, what companies are trying to achieve and what HR departments are trying to achieve. How should all of that be thought of in terms of sales and marketing? And what should we be trying to achieve during this period, and what are the opportunities? And I think that a lot of the success of our agency over the years has really been based on almost counterintuitive strategies that we just know work over and over again. investing heavily in sales and marketing when there's, an economic downturn like the global financial crisis, or, the shortest lived, but one of the most acute recessions ever experienced during, the early stage of the pandemic, et cetera. And during those times, we often have what appear to be counterintuitive recommendations, but actually are based on pretty sound case studies and experience of, what happens to organizations who, commit to certain strategies at times when it's scary to do so. And so I thought today we could talk a little bit about, what companies ought to be doing from a sales and marketing perspective, and what the impact on shareholder value is in terms of sales and marketing strategies at times like these, with this uncertain economy and this kind of shifting dynamic out in work tech and out at the practitioner level and company level. What do you think?
Yes, let's talk about that.
Yes, let us talk about that. So let's start by talking about the economy. You know a lot more, excuse me, about the economy than I do. You follow it a lot more closely. It's a period of great uncertainty. And, how would you describe what you think people's, let's take the fear-based position. What are people scared of? Where's the uncertainty coming from, and what does it look like on the day-to-day level?
Well, I think we live in a very paradoxical economy, because if you just go by the data, unemployment is at an historic low. Wages are up in a real way, like they haven't any time in decades. Mm-hmm. And on the one hand, it's just like people should be feeling good about things, because a lot of how you feel about the economy has to do with your own wallet, your own checkbook. Mm-hmm. But at the same time, it's just inflation is really putting a bite on people in all ways, from the gas pump to the grocery store to, have you bought a plane ticket lately? It's crazy. Yeah. And so I think that there's a surprising amount of negativity out mm-hmm. there, and people are extremely negative about their near-term financial prospects.
Yeah.
So,
yeah, it's pretty crazy. I mean, this is the way I look at it. I've never seen a period in my life where economists were so wrong so frequently. You know what I mean? Yeah. And I don't say this to criticize. I say this because I think that, we had an unprecedented, type of recession during the first part of the pandemic. Obviously unprecedented times. And now we're, experiencing an unprecedented recovery. And when I say an unprecedented recovery, I don't necessarily mean like the rate of recovery or any of those factors that people frequently point to. Yeah. I'm just talking about like it's surprising, and the dynamics of it are very hard to predict. And so economists, miss the job forecast every month. The economists miss the inflation forecast every month. Like everything that we've become accustomed to people getting right and maybe missing, like once a year or whatever, it's just like missing every month. Right. And I think that this, there's almost like this level of uncertainty that people just kind of have a general feel that, the other shoe's about to fall. And they keep looking at all these traditional metrics to figure out the latest indicator that's proving that that's about to happen. But even when those indicators are hit, like bond yields and stuff like that, all these like, things that economists look at as, this has preceded every recession, 20 out of the last 25 recessions. Every time one of those is hit, there's a very dire, prediction. But then, those results don't seem to manifest. So there's a lot of pain out there, but it's hard to quantify that pain and correlate it, like some, long-term negative economic outcome, for the United States and in most countries around the world. It's just strange times.
Well, I think that leading indicators or sort of traditional economic metrics, they can only function when things are somewhat approaching normal. And, we've been so far outside the realm of normal for the past few years when you think about the economic dislocation that has come along with the pandemic.
Yeah.
I mean, just this year, it's just like, hey, we're starting to kind of get back to normal. Then COVID rears up in China, and you have 3,000 container ships sitting off the coast of Shanghai, unable to unload. And you have, a war in the breadbasket of Europe where, you have Ukraine and Russia going at it, and all of the dislocation economically that comes along with that. Supply chains are just completely upside down.
Yeah.
They've been completely just kind of like messed up for 2 years, and
Mm-hmm.
they actually managed to get worse this year. And so it's just like people are feeling it, especially when you get the double whammy of inflation hitting them. So
Yeah. But, go on the way back machine a little bit, because, basically everything that you said to me adds up to just more uncertainty, not unlike the uncertainty that we have experienced at every stage of the pandemic so far.
Yeah.
But, go back in the way back machine to the global financial crisis. It felt like there was a much more broadly shared recognition. It was not uncertainty. There was a more broadly shared recognition that we were tilting, towards a global financial crisis. And it just felt more tangible. It felt more certain, and I remember still, I'll never forget this moment, even though it seems, kind of minimal compared to the overall experience during the global financial crisis. But I was driving, from the office back home. I was listening to the news on the car radio, and it was just like AT&T lays off 50,000 people, and Lehman Brothers, and all of this stuff was happening, and it was a relentless parade of tangible news that demonstrated the economy was contracting, and so it didn't feel as uncertain.
Right.
Which made it easier to kind of manage what your response was to it, right? But doesn't this feel different this time around?
Yeah, it does, because on the one hand, it doesn't feel it doesn't feel as drastic. I think that my fear is that people are going to talk themselves into a recession.
Yeah.
Because they don't have enough clarity into what's going to happen in the near term, and so they just default toward what's the worst possible outcome.
Yeah, it's almost like a psychological overcorrection. You know what I mean?
Right.
People preparing for something that hasn't happened yet, but that they believe strongly is going to happen. On the negative side of the equation, and just moving in that direction.
But even like thinking back to 2008, I remember at the time talking to a professional acquaintance who worked at one of the big management consulting companies, and her talking about, oh yeah, we've got internal briefings, and this downturn is going to be so significant that we're not going to see the economy kind of get back to normal until 2013, which is 5 years away.
Mm-hmm.
And as we all know, it's just like there was certainly a sharp downturn, but whether you look kind of broadly at how fast did things bounce back, or specific to our industry, things, 2009 wasn't a great year, but it was still, for HR tech, was still a growth year. It was still like 10 or 11% growth.
Yeah.
So, I guess I kind of have that, at the back of my head, that, even experts at the, the most reputable brands who are looking at this, are probably getting it wrong. And it's just like, obviously, it's just like it's easier to sell fear because people are willing to buy into it. But, a lot of that fear, especially kind of in the tech industry, is really driven around protecting capital.
Yeah.
And it's not necessarily the prudent growth move, but it's all about, it's defensive and safety oriented, which I get, but I don't necessarily think that's the right outcome, especially when you consider the kind of growth that we know is possible when everybody else freezes up and is more playing defense. Brands that are willing to invest, and we've got a number of case studies going back to the great financial crisis of companies that hit the accelerator on sales and marketing that saw growth coming out of it.
Yeah. And so there's a few interesting points to just, kind of draw attention to there. Number one is that a negative economy is not manifested yet, right? It's not,
Right.
we're talking about something that that many people think might happen and many other people think won't happen. So it's just all kind of classified under uncertainty right now. The second is that you really pointed something out about the global financial crisis and how it's similar now. When there's uncertainty and when there are dire predictions about, kind of overall economic performance, there are always sectors that are more or less impacted, and there's always companies within sectors that are more or less impacted.
Right.
And the only evidence that we have is that, the work tech market segment has been a growth segment through pretty much every period of uncertainty and every down economy that we've had.
Yeah.
And so, SaaS in general, but work tech specifically has been relatively insulated from, many of the negative consequences experienced during different periods, over the last 20 years or so. But then even within that, there are companies who have done better or done worse based on their approach to perceived uncertainty or to actual, downturns or whatever. And so, if I were to kind of put all of that in one big, kind of bow, wrap it in one bow, it would be that there's nothing going on right now except uncertainty. And, all of our history has shown us that we're an incredibly resilient market segment, even during some of the most challenging times in history.
Yeah, and I mean, it's just like there was an article we linked to at a last week's newsletter from the New York Times about the coming tech bubble in the in SaaS specifically, and they timelined it where it's just like this is a conversation that's been going on for over a decade,
Yeah.
and the bursting of that bubble never comes. And I understand why experts look at that when you look at valuations and things like that are absurd, but I don't think that's what's going on this time. And I think that, when you, especially when it comes to work tech and you're looking at how organizations are completely rebuilding their people tech stacks just to have the right technology for the workforce of the 2020s, I don't see that reversing course. I only see that accelerating.
Yeah, and that's a great segue. I want to talk about what's going on in work tech, but before as we kind of cross that bridge into what the fact that the entire market is being kind of reorganized right now. I think it's important to just point out that there's always short sellers, and sometimes short sellers are right and sometimes they're wrong. And, I'd actually distinguish between two kinds of short sellers in the context of this conversation. There's like the one that we all know that bets against companies financially, basically hoping that they fail so that they can, enjoy a profit on a company's failure because they're short sell positions. And sometimes those work out, sometimes they don't. But I think a much more pervasive force that we don't often talk about are the emotional short sellers. And I think that all comes down to reputation capital, right? There's a lot of people who put a lot of value in accurately predicting what's going to happen next. They become emotionally attached to these positions of being able to call, a downturn and implementing the right business strategies because they think that makes them more credible over the long term of their career or whatever they're trying to achieve. And so people become attached to those positions, and sometimes they're right and sometimes they're wrong. I do think people tend to overestimate, though, the reputational capital perspective, because as many things as we've gotten right and as many things as we've gotten wrong, I rarely hear anyone, reference some call that we made like 5 years ago, there's always going to be short sellers out there. And I think that all we can really derive from this is that we're in a period of uncertainty. But you brought up all this, kind of amazing stuff about what's going on with companies and with people who are buying work tech and how their priorities are shifting. So at the same time that we have this economic uncertainty for all the factors that we talked about and many that we didn't, there's also just a great reordering going on, kind of based on a new organizing principle that is a response to the pandemic. And so what are you seeing out there in terms of, kind of the shifting field dynamic or the shifting dynamics of the work tech landscape?
Well, I mean, and that's the interesting thing is, I look at it in terms of two things. Where's the money going? And what are people saying when you're talking to them?
Mm-hmm.
So, in terms of where the money is going, we talked about this last week. That this is easily, well, I think it's already become the second biggest year for work tech investment
Mm-hmm.
ever, and we're not even all the way through April. Just looking at the deals that came in the last week was like, just off the top of my head, something like 700 or 800 million in deals, and it's just like
Mm-hmm.
that's become fairly standard. Where if it's not at least a $500 million in deals a week, it feels like a really slow week. And
Yeah.
so that hasn't changed, and especially the types money going into the types of companies that it's going into. You're seeing a lot more specialization. You're seeing a lot more sort of reinvention
Mm-hmm.
in a lot of ways, whether you're looking at, traditional HCM, reinventing employee experience, on and on and on. But then, it's just like, traveling last week and meeting with, current clients and meeting with sales prospects. I didn't pick up a hint of negativity. It
Mm-hmm.
was, in fact, if anything, it was like, we need to accelerate investment. And
Mm-hmm.
so I'm talking to companies that have just gotten funding rounds that are going aggressively. I was talking to traditional powers that are sinking more money into paid media. And it's just like, you
Yeah.
know, there was not a whiff of negativity out there, or like, hey, maybe we need to batten down the hatches. So there's what sort of you can kind of like feel in the air, but then when you look at kind of what does the data show and what is the experience, it's just like it's not supported by reality.
Yeah, it's not. And I do have to point out that in that context, we kind of have a self-selecting biased sample, because if people are meeting with us, they're probably already committed
Yeah.
to, establishing or extending their leadership momentum,
Yeah.
during this period. At the same time, I know that there's a lot of organizations out there that, kind of are more traditionally reacting to uncertainty.
Mm-hmm.
And they're the ones that we're probably not talking to in those meetings. And I think everyone's just kind of processing in a different way. But I agree with you. I mean, the investments coming into the category, I did a really quick workup of, that's investment in companies, right? In work tech companies. But I
Right.
did a really
Yeah.
quick workup of a few cohorts and, different subcategories of work tech. And the growth in the first quarter was like 25 to 30%, as a category. And so that means that buyers are buying more, because we're looking at a market that, traditionally hovers around the 15%, kind of growth in overall category, right? Like just
Mm-hmm.
take continuous performance management or, recognition or whatever. In any given year, you'll see that market expand 15% on average, maybe south, maybe north of that. But I saw, categories that in the first quarter were, growing like 30%, 35%, year over year, quarter over quarter.
Mm-hmm.
And so buyers are buying more stuff too.
Yeah.
And one of the things that I've noticed, maybe you've noticed this too, but this is a huge sign that, kind of supports one of our core, insights right now, which is that churn is up for everyone. Churn is up for everyone.
Mm-hmm.
And the reason that churn is up is because solution switching is up. It doesn't mean that they're, necessarily, it doesn't mean that they're losing clients because of poor execution or a poor CX or anything like that. But this is just a period where companies have changes to their organizational goals, or they're looking for different ways to do things or achieve things that they haven't focused on before. And a lot of times, they're making a change over here or over there, and it impacts the other solutions they have, because maybe they're moving to a suite over here,
Mm-hmm.
or maybe they're, want in their minds, a more mature this or a more focused that. And so when you see a lot of switching like that, that's another sign that, the overall field dynamic is changing and that a new organizing principle is at play.
Mm-hmm.
So I've seen a lot of churn, and I've seen a lot of growth. And so we've got increased investment, increased buying, increased churn, and increasingly, no pun intended, increased prices, right? Because
Yeah.
now everyone's kind of catching it, the fever. And it's like, well, I'm paying more for stuff, so I'm going to charge more for stuff. And, and inflation and wages and, all that stuff. And so, again, at the ground level, increase in investment, increase in buying, increase in solution switching, increase in prices. Those are all signs of a productive growing, kind of a segment or category, right?
Right. Exactly. And so I think that um, then when you sort of add to the mix the incredibly challenging labor dynamics
Mm-hmm.
of, it's just like what we're seeing really everywhere is companies are struggling to retain talent. I'm talking specifically about sales and marketing
Yeah.
because these are some of the most in-demand positions in the knowledge economy, and people are, chasing bigger paychecks. They're voting with their feet, and
Yeah.
we see companies big and small in all sort of different categories of work tech, and an unprecedented level of turnover, which
Mm-hmm.
that for us, I hate to say it, it's a positive thing because we're continuity,
Yeah.
and so we're benefiting from that dynamic significantly.
Yeah, I mean, I can't tell you how many conversations I've had, how many speaking engagements I've done, or board meetings I've attended, or whatever, where people start by wanting to talk about go-to-market strategy and
Hmm.
sales and marketing, kind of effectiveness and what's the best strategy for times like these. And the conversation quickly turns to employee experience because at every turn, their best efforts are kind of stymied by their loss of key leaders or their loss of, critically skilled employees in sales and marketing or whatever. And they have a broad understanding, ironically, because these are work tech companies, they have a broad understanding that they can't achieve the goals that they want to achieve because of their employee experience. And they might not say because we have a terrible employee experience or whatever.
Right.
They might mention the Great Resignation, or they might, just talk about increasing wages or the need or ability to keep up with the bigger, better finance competitors or whatever. But it's very obvious that the inability to attract and retain, key people is the biggest challenge, to people executing on their business strategy right now. And here we are, and I bring this up again every time I bring it up. I want to say it's not a self-serving comment, but here we are again proving that a primary focus on employee experience makes a company more resilient through and sustainable through all kinds of situations. In a situation like this, you mentioned continuity. Well, where does that continuity come from? We've lost 2 people in the last 3 years. It's virtually 0% layoff,
Hmm.
0% turnover. And we have no problems filling open positions. We have 100% acceptance rate whenever we make an offer. And so a lot of times, clients that we're working with, great clients, great companies, some are new to us, some we've been working with for 5, 6, 7 years. Not only are we able to, kind of, offer the short run, strategic guidance and campaign execution and stuff like that they need, but also we can afford business continuity because in a lot of cases, our teams are the only people who have been around for longer than 2 or 3 years. And,
Yeah.
they kind of know how things work. They know, what the brand standards are. And with very minimal direction, we can, turn out a lot of great work and prevent that, kind of block of we can't get this done because we don't have the people. Well, we've got all the people, we've got the analysts, we've got the consultants, we've got, the sales and marketing and agency people,
Hmm.
and they've been with us forever. And so,
Yeah.
it's not like ramping up new folks or, kind of experiencing the same revolving door. So that's given us an advantage during uncertain times. And we certainly believe that we give, other folks an advantage during uncertain times.
Yeah, and I
Um,
mean, I think on top of that, it's just again, this is a self selection bias, but the companies that we're talking to are seeing dramatic growth this year, seeing
mhm.
25, 30, 40, 50% growth
Yeah.
year over year. And it's just like the, uh, they're feeling incredibly positive, and they're more than willing to put more money into people and programs. It's just the people part they don't have much control over because they have to, you put more money into people doesn't mean you're necessarily going to be able to retain them.
Yeah. Well, let's kind of pull it all together and talk about why this matters, what you can do from sales and marketing, and, why the shareholder value component is significant. So, we've talked about this being a very uncertain economy, and people having different views and perspectives, and that cascading into the plans that they create for what the next year or two looks like.
Mm-hmm.
We've also talked about very dynamic field where buyers are changing their organizational priorities. They're looking for different categories of solutions. They're looking for different ways to get things done, or try to get new things done. At the same time that there's tons of investment in the market segment, buying is increasing, switching is increasing, etc. So, you've got this uncertain economy and a very dynamic field. And so what matters and what should we be focused on from a business strategy perspective and a sales and marketing perspective? And I think the big picture answer is that it's all about leadership momentum. And it's specifically about increasing shareholder value through sales and marketing initiatives at a period where other people may be reticent to do so. So I wanted to talk a little bit about leadership momentum. I wanted to talk a little bit about shareholder value and why it's important, and then how that translates into stuff that can actually get done. Does that make sense?
Yeah, let's do that.
Yeah. Let's jump right in.
Let's do that.
Such a small topic.
Yeah.
Well, first of all, I want to talk about the concept of leadership momentum, because I think leadership momentum is an important concept that's often misunderstood about why, it's important, but also like how to achieve it. And, I would just kind of put it in this context. Every, category within work tech has dozens or, hundreds of vendors, all, kind of fighting for their slice of the pie, right? And we know, from looking at the stuff for over 20 years, that there's kind of a, an invisible hand of market share, a law of market share is what we call it, where in most markets, as they're maturing, you probably have 3 or 4, leaders who, together comprise about 50% of all the market share within a segment. And then you have a whole bunch of other people, kind of a long tail of folks that comprise the other 50%. And, you just think about that, that Gartner group pie of market share in your mind, and it always looks the same. There's a few big slices of pie and then a bunch of little slices of pie, and they get so small that there's like call outs, and, you're writing or using symbols to refer to companies or whatever. But that's a very predictable pattern, and it's something that's, remained intact, for like the last 20 years or so. Right. Mm-hmm. And so, a lot of companies, claim, and I think, authentically claim that they want to be leaders when they don't have the ability to be leaders. And it's almost as if the recognition that they can't be first, second, or third place in a market would somehow make their business goals less noble, or, like less achievable, or even not worthy of achievement. Mm-hmm. And I have a very different view of that, because, I'm just thinking about leadership momentum, and specifically what I mean when I say leadership momentum. When we talk about it, leadership momentum is outperforming the industry average for a period of time. And, bonus points if you're able to, be one of the top performing, companies in a market segment for a period of time. And so if the, number one company is growing at one of the highest rates in the industry at 40 or 50%, if you're able to grow at 60%, just as an example, if you're able to grow at 60% for a 2 or 3 year period, and your growth is higher and faster than the folks that kind of are the best in class in the industry, then you have leadership momentum. You may not be on a trajectory to get in first place, but you've demonstrated that your business can outperform the industry average and the leaders for a period of time, and that has many benefits. So, establishing leadership momentum doesn't have to be about wrestling first place out of the hands of, the entrenched favorite in the market. It can just be an effort to demonstrate that you can grow faster and achieve other things to greater degree than those folks who are kind of viewed as the leaders in the market. What do you think about that?
Oh yeah, I mean, I think that a lot of times that one of the really overlooked elements of leadership momentum is just good storytelling.
Mm-hmm.
It's just like everybody wants to believe that their technology is different. In some cases, it is, but more or less, what people are really buying is they're buying the story. They're not buying the
Yeah.
functionality of any
Yeah.
software company, and it's just a matter of can you tell a compelling story that allows you to frame yourself as a leader, not necessarily, leading
Mm-hmm.
technology, um, but a leading brand and a growing brand. Does that make sense?
It does. I was just thinking when you said that, everyone loves a robust challenger. Everyone loves that.
Oh yeah.
Everyone loves, the feeling like they're part of a brand that's on the rise, that may not be as big as the household name, but is, trending, if you will, to the point where there must be something amazing there because this brand kind of came out of nowhere. Maybe 5 or 10 years from now, they're going to be bigger than, the dominant brand, but I want to be part of that because, it feels more innovative. It feels like it's something that I can get behind. So yeah, I think that storytelling is a big part of that. But that leadership momentum is critical. That story of leadership momentum and the reality of achieving it is critical because it can have such a significant impact on shareholder value. And I kind of want to break that down for a moment, what that means, and what the benefit of shareholder value is in this context. If you have, like when somebody comes in, and let's just talk about it in terms of acquisitions first, and then we'll kind of, cascade that out
Mm-hmm.
because, in this space, everyone's always thinking acquisition all the time. They're thinking buying, they're thinking selling. They're thinking that they're, morally opposed to acquisitions and we're always going to be a private, whatever. Right. But
Yeah.
everyone, reacts or responds to this notion of acquisition in the type of market that we're in.
Mm-hmm.
And acquisition value is driven by kind of, perceived shareholder value and actual shareholder value. And what drives shareholder value, are a lot of, kind of concrete and abstract, inputs.
Mm-hmm.
And so I think when people come into a category and they want to acquire a company in a category, the first thing that they're looking at is just kind of like basic fundamental, business drivers of success for that organization. And so is the company growing?
Mm-hmm.
Is it growing at a certain rate? How does that rate compare to, kind of industry growth rates
Mm-hmm.
within that segment? And, all of those things kind of have an impact on, the valuation in terms of what someone would be willing to pay for a company in acquisition because of the perception of future value. And so having leadership momentum outperforming, other companies in a category becomes almost like an extra value kicker
Mm-hmm.
where it's like, hey, if you're a good company in a hot category and fundamentally strong, that's awesome.
Mm-hmm.
If in addition to that, you're also like showing this burst of, growth that puts you above, the average for the segment or whatever, that's going to enter into the emotional consideration of the value of that acquisition, and is going to result in a higher price of sell, and a lot more people interested in talking to you about it.
Yeah, and I mean, I think a good example of all of those dynamics over a period of time is a company like Cornerstone On Demand,
Mm-hmm.
where you look at what they did during the Great Financial Crisis. They were able to close a significant revenue gap versus Saba. They were probably, I think, what, in the 2008 2009 timeframe they were about 10 million in ARR.
Mm-hmm.
Saba was over 100, but by 2011 2012 they'd close that gap. And there was sort of the feeling like, oh, Success Factors, Taleo,
Yeah.
Connexa all got bought. The music stopped and there wasn't a cheer for Cornerstone, but they were able to tell a convincing story about we're a single organic platform, really having a good story of going against that sort of like consolidation by acquisition.
Yeah.
In the meantime, they stayed the course. They reinvented themselves and went on an acquisition spree of their own. They acquired Halogen, Lumes,
Mm-hmm.
Saba itself, and then they've since gone private, and they're in a position now where just you look at the Edcast acquisition a couple of weeks ago, they're really uniquely positioned now to tell, I think, a fairly compelling and different story around how you pull together LMS and LXP in a way that no one else on the market really has. And so there's about 3 or 4 different iterations of how do you, play aggressively, play to win, especially when you're going through sort of like counterintuitive market cycles where it feels like maybe we got to ratchet back. And then how do you constantly kind of reinvent your story to tell a story that resonates with the market at that given time? And so that's a unique talent to be able to do that. But the best brands that we've seen historically in the space have always been able to do that.
Yeah. And, it just, for me, comes back to leadership momentum and the impact of leadership momentum on shareholder value and the options that opens up for you. And so if you're able to demonstrate this leadership momentum, the longer that you can sustain it, the better. But it not only increases your value in an acquisition scenario, but it also just creates all kinds of options for you.
Yeah.
At the very least, if you're raising money, then the terms that you're able to raise money on are going to be better because of the perceived leadership momentum and perceived future value of your organization.
Mm-hmm.
It also opens you up to all kinds of debt financing and other opportunities to kind of acquire working capital. But it also, we know, has a significant impact on, where rubber meets road kind of metrics for sales and marketing. Your conversion rates improve, the velocity improves. There's just all these things that we know when leadership momentum is being achieved. There's a correlated impact on, kind of the overall effectiveness and efficiency of kind of multiple aspects of sales and marketing. And so, establishing leadership momentum is not just about, temporarily increasing the value of your business so you can sell for a lot of money. It just opens up a world of options in terms of how you're able to kind of keep that, steam going for a while.
Well, in your mind, how much is leadership momentum correlated with brand awareness?
Well, I think it's everything. I mean, I think it's everything because, the thing is like, we know from, research and experience that brand recognition is predictive of growth and market share. And so it's usually anywhere between a 12 to 24 month lag. But if you see significant increases in brand recognition against peers in a segment, then you're going to see a similar increase in overall market share over time because of the impact that it has on everything that happens in the sales and marketing experience leading up to, kind of that growth. But, just very specifically, if we go out and do a brand recognition, study right now and find that, a company in third place for brand recognition had moved from fifth place to third place, then within, 12 to 24 months, they're probably going to have moved from fifth to third in overall market share. And so, but it's not just about leadership. If you see, like in the old billboard days, a song would have a bullet next to it if it was like, rising really quickly. You can be in, 15th place and move up to 7th. And that's going to be a clear sign that you're establishing leadership momentum. And while you might not rise to, number 2 or 3 or whatever in overall market share, you're going to significantly increase your market share because of, that huge leap in brand recognition. And so I kind of think it, kind of comes back to the same levers, which is if you are trying to protect your leadership momentum that you currently have, or if you are trying to establish new leadership momentum, what do you do about it? And we can just tick through the CX, the subdomains of customer experience to talk about exactly how to do that. And I do think that there's, with the amount of economic uncertainty there is right now, that always creates an opportunity. It creates a seam, right? With the fundamental performance of the segment where, purchase intent is going up, where switching is happening at an accelerated rate, and where, investment continues to flow into the category at unprecedented levels, it is the time to be aggressive in your intent to establish or protect your leadership momentum. So step number one, if you take, customer experience, and you go through the subdomains of brand experience and marketing experience and sales experience and product experience and customer success, there's something that you can do in each one of those areas. There's a lot of things that you can do in each one of those areas in order to help towards a plan of establishing leadership momentum at a time when it's extremely beneficial to do so. The first one, you hit in the middle of the bat, which is increased brand recognition. Is there a difference in your mind between increasing brand recognition and increasing lead flow?
Absolutely. I mean, we've seen this time after time after time. It's just like brands with better brand recognition perform better from a lead flow perspective. Your conversion rates, all your KPIs, no matter how you're looking at it, all go up. And it's strictly correlated with how much have you invested in your brand. End of story.
Yeah, and it's one of the reasons why we separate brand experience from marketing experience under CX, because the motions to achieve a great brand experience and to, kind of hit the associated metrics, which would be brand recognition, functional association, kind of the understanding of brand attributes in the market. The motions that you go through to achieve that are very different than a marketing motion or that marketing experience, which really tends to focus more on connecting with people, engaging them, converting them, and expanding, the relationship over time. And I think it's still to this day one of the most frequently underutilized and most effective strategies is to focus on the brand experience, increase your brand exposure and your brand recognition, and use it as an opportunity, especially when there's so much change in the field dynamic of, what people are trying to achieve and what they're buying, to use your increased brand recognition as an opportunity to seize the narrative, or at least influence the narrative in a significant way, to create the framework that people use to make purchase decisions over the coming years, because people are changing the way, employee experience has become the thing, not just in work tech, but, even people who've never uttered the words employee experience say things like, we can't get anything done because we can't hold on to people. Well, that's employee experience. And eventually, people are going to become very focused on, kind of how to do that. So, a significant investment in brand, and it has to be sustained over time is, kind of step number one to establishing leadership momentum. And that means a really strong focus on, earned media and owned media and paid media that is not focused on connecting with a marketing qualified lead. It's focused on bolstering your brand recognition and what you stand for, your functional associations, what you do, and how you can contribute to, the rapidly manifesting true current future of work. It's like, we used to talk about the future of work. You have to be ready for the future of work. We help you get ready for the future. Well, the future of work's here. And it got here before we didn't get to specify what it is, despite all of our attempts over the last 15 years to say the future of work will be like this. It just showed up one day and it is what it is. And now we're trying to figure out what the future became instead of like trying to, forge it. Right. And so being part of that conversation is step number one, just, investing in the brand experience.
Yeah. And I think that, to bring that back to a real world example, Ultimate Software, when they really put the pedal to the metal on paid media, they had, TV commercials, they had billboards in like the, top 35 MSAs across the country. And that really paid off in terms of the revenue growth and ultimately propelling them to the acquisition and the roll up with Kronos. And so, there's tons of examples. We see those examples playing out in real time, even now with industry leaders that are, just look, do the billboard test. If you're out traveling and you see a billboard for a company in your category, or if you see a TV commercial for a company in your category, it's just like, you can bet that if you're going up against them as a competitor and they're spending like that and you're not, you're about to get spanked a little bit in sales in the next year.
Yeah, absolutely. It's like, here are some signs, that there are things that you have to do to be able to invest in brand recognition. You don't just go out and increase ad spend, right?
Right.
But here are some things that people should be thinking about. If you have not changed your message in the last, like year and a half, you need to do that.
Yeah.
If you don't have a different website, it's been the same for the last, year or two, you need a new website. And I'm not saying it because it's like, oh, you need a fancy new website with, animation and stuff like that to stand out. I'm saying it because changing your website is usually a sign that you've acknowledged the shift in the marketplace and that you've changed your position and responded to it.
Mm-hmm.
And so, people who are still, kind of drafting behind the same old message and the same old, kind of brand platform of the website and stuff like that, probably have not done the, hard work to adapt their strategy and their position to the way that people are buying right now and what the significance of their solution is in this, new future of work that we have, shown up in and are trying to figure out. And so there's just some, brand stuff, some message stuff, some brand platform stuff that, if it hasn't changed recently, you're probably a little bit late in acknowledging how the changes in the world and in the market have changed the way that you need to position to be relevant to buyers. But, then we get to marketing experience. And that's, actually connecting with people, engaging with them, trying to convert them into a sales relationship. And that's changed so much in, the last year or two. I think that if people are still doing things the way that they were doing them, 2 years ago, that probably needs a lot of consideration as well, because, industry marketing is saturated. Inbound marketing needs to be utilized in a different way because of the cost versus the, conversion. People are looking at, more hybrid models that make a lot more sense of, not being, religiously inbound or religiously account-based marketing, but basically combining aspects of outbound, inbound, and account-based marketing from a model perspective to find a way to engage with people in the marketing experience and in the sales experience that creates more room for connection and conversation because of the shifting goalposts around, what people are trying to achieve inside their companies.
Well, and I think also just you're seeing a greater need for personalization across the sales and marketing conversation, where it's just like, if you think about like all the emails that are still cramming your email box that are playing that 10-year-old kind of like inbound marketing game, and it's just like delete, when you're getting a personal message that, is not just, getting like cranked out of a CRM somewhere, you can feel that. And I think that we're seeing that not just in the approaches and the messages, but also the types of content and being a lot more efficient with time, where that's, I think, what we're seeing drive a lot of the demand for video is it's just more efficient from a time perspective.
Yeah. Well, and I would also just say you get what you market for, you know what I mean?
Yeah.
Like if people are, holding on to, kind of fast conversion inbound models, you can't sell blind anymore. You can't market blind, and you can't sell blind anymore. This notion that you're going to drive an inbound lead, and that inbound lead is going to be, vetted and turned into a
demo ready lead.
Yeah, demo ready lead, right?
Yeah.
You can still do that, but the problem is, that those are rapidly becoming or have become commodity buyers. And so you get what you market for.
Yeah.
If you're focused on, fast conversion and, kind of numbers driven, customer acquisition, you're going to get a lower value customer that is buying based purely on features and benefits and cost and, speed of getting something implemented and all that. And they end up not being the most productive customers in the portfolio. And so you can do that. It's a good strategy for a low cost, mid-market, solution or something like that is going to be more features and benefits, focused, generally speaking. But it's not a great way to produce, high value customers that are aligned with, kind of the purpose of the organization, attitudes, behaviors, and beliefs, and, that radical buyer profile. So this is a time where, because of the uncertainty, which creates an opportunity, because of what's going on, in the market with massive turnover and increase in buying behavior and, sustained large levels of investment, this is a time to invest in brand, and it is a time to rethink your underlying sales and marketing models, because the prevailing sales and marketing models that we used prior to the pandemic are not the ones that are producing the highest value market share right now. They're not producing the best buyers.
Absolutely. And, I think as we move toward wrapping up, since we're close to time here, there's a lot of, I think, pretty actionable steps that, we've offered up here about what does this mean? And then how do you apply that? But I guess just in terms of closing, what else would you want listeners to take away about this kind of unique moment in the market?
Whether you think about it or not, given the economic uncertainty, the underlying dynamic of all of the shifting of priorities and solution purchases and all that stuff that are going on in the market, and the benefits of establishing leadership momentum, whether you think you need to or not, if you haven't, number one, you need to evaluate your brand. Number two, you need to evaluate your message. Number three, you need to evaluate all of the platforms that drive your brand and message out into the marketplace to make sure that they are, finding their right location in the shifting, kind of perceptions of what buyers need in the marketplace. Number four, you need to invest heavily in brand to drive recognition, which is going to drive better, marketing results, sales results, and business results in varying, lengths of time after that investment. And number five is you need to be very critical about your marketing model. And what your model needs to be versus what it is. And then the last thing that I would say that we didn't talk about, but I'd love to talk about it at another time, is you really need to start thinking about creating defining moments in your brand experience and your marketing experience. So we don't have to get everything awesome and perfect in what we do from a brand and marketing perspective, but there need to be defining moments in that process that elevate people's perception of your company and their perception of the value of working with your business. Beyond kind of the everyday and the mundane. And so you have to create these amazing experiences, and those amazing experiences are going to be, really focused on a few defining moments that really break the script of what people expect from, B2B software companies and services companies.
Very well said, Bret. I hope that everyone takes away a measure of hope and optimism from this conversation in a time that is filled with way too much fear and darkness.
Hear, hear. All right, man. Well, have a great week. And,
you as well.
Look forward to speaking again.
Let's do it again next week.
All right.
Take care.